Welcome back everyone. Today we are going to start with a new chapter. The chapter name is Issue and Redemption of Debentures. In this chapter we have two parts, issue of debenture and redemption of debenture. We are going to discuss with the issue of debenture. Later on we will discuss about redemption of debentures. So what do you mean by debentures? Debentures are nothing but loans from the public. What do you mean by debenture? It is loan from the public. Right. The public will give a loan to the company and company will give a document. It is the proof. It is the proof that the person given a loan to the company. Right. Let us say company needs 100 crores of loan, and it is like your issue of shares. We will divide the loan amount into equal parts or in equal value. Let us say we need 100 crore loans. We will divide it 1 crore debentures of rupees 100 each. So 1 debenture is equals to 100 rupees. 1 crore debenture is equals to 100 crores. Like this, we will divide the loan. So let us see the meaning of debenture. Smallest unit in which debenture of company smallest unit in which, let's say, debt of the company is divided in equal value. Smallest unit in which debt of the company is divided in equal value. Right. Here also, in this chapter also, we have application money, allotment money, first call, final call, like this. Right. What do you mean by applications? What do you mean by application and application money? Application is nothing but, let us take an example. While you are joining a college, at the time of admission, they will give an application and you should fill that, and along with that you should pay some amount, some little amount, 200, 300 you should pay. That is called your application money. And whatever the paper they will give, that is called application. Here also the same. Application means it is a paper. Normally they will give a paper and you should fill it. Along with that application you should give certain amount, whatever they ask for. If it is 100 rupees for per share, sorry, per debenture, they may ask you 20 rupees on application. Why they will charge application money? If they won't charge application money, people like you and me will simply apply for the debentures and ask for the debentures, but we won't buy. The company needs genuine buyers. The company needs genuine buyers so that they will keep a application money. Right. This is your basic, just basic. Let us do the sums. ABC Limited. Example. Example 1. ABC Limited offered. ABC Limited offered 10,000 debentures. 10,000 debentures of 8% of 8% for public. For public. subscription, public subscription. Application were received for 15,000 debentures. Applications received for 15,000 debentures. Right. Pro rata, pro rata allotment is made. Pro rata allotment is made, and on application they are asking 30 rupees, an allotment 20 rupees, first or final call, remaining amount, how much remaining? 50 rupees, right? So this is the question. Let us do the solution. It is similar as like your issue of debentures. Uh, in the issue of the issue of shares, in the issue of shares, wherever we use the word shares, here we should use debenture. That's the difference. Slight difference will be there. We will discuss along with the answer. So let us do journal entry. Journal entry. Okay, this piece is okay. I don't know. Let's check. Yes, I fill the headings. Right. First. And some more thing I need to explain in the question. ABC Limited offered 10,000 debentures. What do you mean by debentures? You know it already. What is this 8% debentures? What is this 8% debenture? This 8% is a coupon code. So, coupon rate, not code. Sorry. Coupon rate through which we will calculate the interest rate. We will calculate the interest rate, right? Received for 15,000 debentures, pro rata allotment is made. What is pro rata allotment? You know it already. Still, we will discuss again. What is pro rata? It is proportionate allotment. It is proportionate allotment. What do you mean by proportionate allotment? Here in this question only, we have issued 10,000 debentures. Is that right? But public applied for 15,000 debentures. We are not going to reject. We are not going to reject the applications, but we will make a pro rata allotment. Means if you applied for 100 shares, we will allot you like 80 or 90 shares, 90 debentures. If you applied for 100 debentures, we will allot you 80 to 90, whatever it may be. This is called proportionate allotment, right? Did you understand that? Okay, yeah, that's it, right? Yeah, let us do the solution. First, what we will do, in the application we may have received amount, right, of rupees 30 on 15,000 shares. Sorry, debentures. I'm still in shares. 15,000 debentures into 30. We have received 4,50,000 on application. Where we might have received in bank, right? Bank account debit to 8% debenture application account. How much? 4,50,000. We have received in the bank account 4,50,000. And where we will transfer, here we will transfer to debenture account. 8% debenture application debit to 8% debenture account. In your issue of shares, it is share capital. Here it is debenture. How much? We have made a pro rata allotment, right? Here 10,000, whatever we have issued into face value 100, right? Yes, 100. Sorry, 30. Application, on application we have received 30, right? 10,000 into 30. 3 lakh rupees goes to the debenture account. Total 4 lakh 50,000, right? Remaining 1 lakh 50,000. Remaining 1 lakh 50,000. What we will do that? What we will do that? We will adjust in the allotment. Whatever we might have received or we should receive in the allotment, we will adjust on that amount to 8% debenture allotment. 1 lakh 50,000, right? Why we will show that? Because we have received in the application itself, so why we are showing here. And then next allotment 10,000 debentures into 20. How much it is? 2 lakh rupees. First we make it due, right? 8%, right? 8% debenture allotment debit to 8% debenture account. 8% debenture account. How much? 2 lakh. We are making it due. When we receive it, we will receive in the bank account debit to 8% debenture allotment. Debenture allotment. How much we might have received? So how much we should receive? 2 lakh rupees we made it due. Out of that 2 lakh, we have received already 1 lakh 50,000. Remaining 50,000 we should receive. Right. Take it down and final call, right? Final call. It is 8%. We should make it due. 8% debenture. Final call. Debit to 8% debenture account. How much on final call? 10,000 into 50, 5 lakh. 5 lakh. Is that right? Yes. 5 lakh. To debenture 5 lakh. And we will receive bank account debit to bank account debit to 8% debenture final call. Is that visible? 5 lakh. 5 lakh. Yes. You can take it down. The question is done. Example is done. You can take it down. Pause the video and take down. Let us move to example number 2. Here in this example we have received entire loan in application. The questions may be it may be asked for, or it may be specified that they have received in application or in allotment also. They may receive in final call also, right? Here they have received the entire loan in the application itself. Let us take this question. XYZ issued XYZ issued 2000 10% debenture, 10% debenture of face value of face value rupees 100 each at a premium of 10%. Who can issue in premium? The company the whose company has goodwill in the market. 10%, right? Okay. Application received 20 so sorry 2200. We have issued 2000 debenture and application received for 2200 debentures. Entire amount receivable on application. Entire amount receivable on application. Entire amount receivable on application. Pro rata allotment is made. Pro rata allotment is made. Okay, let us solve this. Let us solve this. Yes, journal entry. We'll start from here. I think you can start there only. Let me. Journal entry. Yes, first. What entry? The first entry is for application received. How much? We have received 2200 application. We have received of rupees 100. 2,20,000. Okay. Bank account debit to 10% debenture application and allotment account. Application and allotment account. How much? 2200 into 100. 2,20,000. We have received. Right. We should transfer it to debenture account. 10% debenture application and allotment account. Debit how much? 2,20,000 and 2 10% debenture account. 10% debenture account. How much? 2000 we have issued. 2000 into 100. 2000 into 100. Right. We don't have any security premium. Right. 10% premium is there. I think should get 2,40,000. 2,40,000. Right. 10% means 200 debentures into 100. 20,000. We should add 2,40,000 totally we will receive, and 10% debenture application 2,40,000. Out of that 10% debenture account, how much it goes? 2000 we have issued into face value 100. 2 lakh rupees goes to the debenture account, and security premium. Security premium. Security premium how much? 20,000. And remaining 20,000 they have given allotment, pro rata allotment. Should we take to debenture allotment account? No. Why? Because we don't allot anything, because we have received entire loan in the application itself. So what we will do, we will just refund that to bank account. We will credit the bank to bank account, right? How much? 20,000. Yes, this completes your example 2. Right, huh? Okay, example 2. So shall we move on to very important concept, that is debentures are issued with term of redemption. Here, what do you mean by redemption? Redemption is nothing but repayment. If you take loan, you should repay, right? Redemption is repayment. Debentures are issued with term of redemption. Term of redemption means if you take a loan, they should, or they will give a time, right? 2 to 3 years, 5 years, whatever it may be, they will give time. So let us say they have given 2 years or 3 years. It is called term. With term, you should pay us a return on this term, right? Okay, done. Next, we have some 5 cases. Before that, terms of redemptions. What are the terms of redemption? On what term we will redeem? Terms of redemption. Terms of redemption. The first one is on maturity. The second one is method of redemption. The third one is redemption value. So, 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 what is maturity? What is maturity redemption? Maturity redemption means they will give, or you will give a time 2 to 3 years. I will pay the loan. That is called maturity period. At this time, it will get matured. Method of redemption we will discuss in part 2. It will be more better there. Redemption value. So on what value we will redeem? Let us say we have issued at 100 and repay at 110 at a premium, or we issued at 95 at discount and we may uh, redeem at par 100. Yes, right. That is your redemption value. We have 5 cases on redemption value. Let us discuss those 5 cases. Shall I erase this? Okay, the case 1. Case 1. What is case 1? We have face value of 100, right? Then we are issuing 100 rupees, issuing at 100 and repaying it, redemption at 100. So here it is, we are issuing at par and redeeming at par. Issuing at par and redeeming at par. Shall I write? Issue at par and redemption at par. So, how will we treat? It is a normal case. It is a normal case. We are issuing at rupees 100, right? Bank account debit to whatever debenture application and allotment account. Let us say we have received an application, entire loan in the application itself. Let us take 100 and debenture application and allotment account debit to debenture account 100 rupees. It is what it is. We have issued at par and redeemed at par. Now the second case, the case one is finished. Let us move on to case number 2. Face value 100, issued at par 100 and redeemed at premium 110. So how will we treat that? How will we treat that? The excess 10, whatever we are redeeming, it is our capital loss. Right? It is capital loss. How will we treat that? Let us do the solution. Bank account debit to debenture application and allotment. Application and allotment we have issued for 100, right? Then debenture application and allotment account debit, it is 100 and we have capital loss of rupees 10. What will become? What it will become? It will become debit. Sorry, capital loss, right? Loss on issue of debenture. Why we are debiting? Because it is loss. Debit 10 to debenture account 110 and one more entry will be there. One more entry will be there. Loss on issue of debenture to premium on redemption of debenture. Gross length, right? 10 and 10. Should write it correctly. 10 and 10. Why it is debit? Because it is our capital loss. And why will make it credit? Because it's creating a liability. It's increasing liability, right? The extra 10 rupees whatever we have to pay, it will create a liability, right? That's why we will credit it. Case 2 is done. Let us move on to case 3. And one more thing here, these two entries will get merged, but not in this case. We will discuss that case in later. I think it is fourth case. We will discuss that. So here it should not merge. It is not correct. It should be shown in the separate entry because of prudence concept. Do you know the prudence concept? Anticipate the losses but don't record the future profits, right? That's why we make it separate entry. We are anticipating the loss, we are showing it separately. Okay, you take it down. We'll discuss the merging journal in the fourth case, but now we'll discuss third case. We have third case, right? Case number 3, face value, issue price, redemption. Face value is 100. We are issuing at 95. We are issuing at 95, 5 rupees discount, redemption value 100, redeeming at par. We are issuing at discount and redeeming at par. Let us do the solution. Bank account debit to debenture application and allotment. How much? 95 we are issuing, 95 we will receive. Then debenture application and allotment debit. How much? 95. And we have capital loss of rupees 5. Capital loss of rupees 5. Discount on issue of debenture debit 5 rupees, right? It goes to debenture account 100. Is that right? Take down the third. Case number 4, face value always 100, issued at discount 5 rupees and redeeming at 100, sorry 110, redeeming at premium, so sorry redeeming at premium. So let us do the journal entry. Bank account debit to, will receive how much? Debenture application and allotment 95 we will receive in the bank. We have issued at 95, right? Debenture application and allotment, debenture application and allotment how much? 95. And we have here these both entries. In the second case we have discussed that these two entries that will get merged in this case. Why? We have two capital losses. We have two capital losses and we have issued a discount and redeemed at premium. In this case, those both two entries will get merged. So, total we have loss 15, right? Loss on issue of debenture. How much? It is 15 to debenture account. How much it goes? Face value 100 to premium on redemption of debenture 10. In this case the both entry will get merged. Let us move to the case number 5. Take down these both. Yes, case number 5 is very simple. Should move quickly. Case number 5, right? Issued, okay. Issue price 110. Who can issue at premium? Who can issue at premium? Whose goodwill is there in the market, right? Redemption at 100. Bank account debit. How much we will receive? Issued at 110. 110 we will receive. To debenture, application and allotment 110. Is that right? The second entry, debenture, application and allotment 110. Sorry, debit 110. 2. Debenture account 100, and we will create a liability account security premium 10 rupees. That's it. The case 5 is done. You can take it down all the cases. Yes, let us move to the case number 6. Yes, case number 6 is not practically possible. Case number 6 is not practically possible. It can exist in theoretical or in your books. Right. Let us start with the question. Face value and issue price, redemption. Redemption, right? Face value is 100, issue price at 110, redemption at 110. Let us say. Who can issue at premium? Who can issue at premium? Whose goodwill is there in the market? Right, goodwill is there in the market. And who can redeem at premium? Who can redeem at premium? Whose goodwill not there in the market, whose goodwill is not there in the market. Is that possible? Is that possible? You can ask me a question. Sir, at the time of issue they may have goodwill, but at the time of redemption they might not have the goodwill. But it is not possible. Why it is not possible? Because at the time of issue only they will say the redemption price. They will say the redemption price and face value also, and they will mention when will they redeem. It may be 2 years later, 3 years later, right? They will say in the earlier itself. So that's why it is not possible practically, but it can exist in the book. So how will we treat? How will we treat? What is the entry? Let us do the entry first. First we will receive bank account debit. Bank account debit. At what price we have issued? 110. 110 we will receive. Is that right? Is that right? And we have capital loss also. Loss on issue of debenture. Loss on issue of debenture debit. Loss on issue of debenture debit. Let us take some more space. 110. Loss on issue of debenture debit. Rupees 10. At the time of issue we have loss of rupees 10. Is that right? Yes. 2. Debenture account. To debenture account, how much will go to the debenture account? Whatever the face value will go to the debenture account, right? 100 rupees. And then we have another capital loss. To premium to premium on redemption of debenture, 10 rupees. And we have security premium, right? Security premium of rupees 10. 120. 120. Is that balancing? Yes. Your case number 6 is done. Let us move. Take down the solution and question. By these cases we have understood that we can issue at par. We can issue at par and can be redeemed at par and premium also. Is that right? Yes. And we can issue at discount. We can issue at discount and can be redeemed at par and premium. And we can issue at premium. We can issue at premium and can be redeemed at par but cannot be redeemed at premium. We cannot be redeemed at premium. Why? Why? You already know it. It is not practically possible. It can exist in the books or in your examination paper also. Yes, my sir will always say some Medhavis have given in the textbooks. What we can do? Let us move. The next concept is interest on debenture. Interest on debenture. So what is interest on debenture? Debenture is loan. If we take loan from anyone, from bank also, from your friends also, whomever it may be, we should pay interest, right? Is that correct? Yes, obviously we should pay the interest. That is interest on debenture. So what will become to us this interest? What it becomes? It is our expenses. It is our expenses. Is that right? If we pay interest, it will be our expenses. Obviously it also creates a liability. What it creates? Liability. It creates, okay, interest we should pay to the debenture holder, right? If we pay interest to him, it will become our liability. We are liable to pay interest, right? Yes, this is your interest on debenture. Let us do one example. For better understanding. For example, we are doing example XYZ Limited. XYZ Limited issued 10% debenture of rupees 10 lakh. 10% debenture 10 lakh, right? These debentures were issued at premium of 10%. Issued at premium of 10%. Of 10%. Is that right? Yes. So, shall we do the solution? Yes, we can do the solution. First, we will calculate the interest. 10 lakh rupees is the value of debenture. 10 lakh into 10%. It is coupon rate through which we can calculate the interest rate. So 10% is the interest rate. 10% is equals to 1 lakh. Is that correct? This 1 lakh is our expenses. 1 lakh is our expenses and it will create a liability also. We should pay to the debenture holder. Right. Shall we do the entry? Because it is expenses, we will debit it. Interest on debenture. How much it is? 1 lakh. Right. To whom we will pay? Debenture holder. How much? 1 lakh. And we are making it due. Not yet paid. At the time of payment, we'll make an entry. We will release the liability. Debenture holder account debit. What we are doing here? We are releasing the liability. 1 lakh rupees. From where we will pay? From bank. Bank is going down. Bank account 1 lakh. Yes, the example is done. You can take it down. Shall we move on to next? Is there any other example? Let me see. Yes, it is done. Yeah, this is done. Next we'll move on to tax concepts. Tax concepts. How? Let me explain. If he earns, the debenture holder earns 1 lakh rupees income. 1 lakh rupees income from our company, right? Through our company is earning 1 lakh. You should pay tax. Is that right? Yes, you should pay tax to the government. Tax to the government. Is that right? But is that possible? Is that possible? Can a government trace each and every debenture holders? No, it is not possible, because there will be n number of peoples. There will be n number of peoples who are holding the debentures. So the government will say to the company, see, company, I cannot track each and every debenture holder and who are earning income from your company, but you can easily track them. You can easily track them. So do one thing. If at the time of paying the interest, at the time of paying the interest of rupees something, anything, you deduct tax on that income, whatever percentage prescribed by the government, you should deduct that, and whatever deducted amount you will remit to the government. You will remit to the government or pay to the government. So what it become here? Liability to pay to the government. Is that right? Yes. So the whole concept is called TDS, tax deducted at source. So from where the income is generating, from there only we will deduct tax. We will deduct tax and remit it to the government. It is called TDS. What is the treatment? What is the treatment? Let's say in this sum only. Now we will take another example. Let it be this example only. I will let us the solution itself. Let it be this example only. In this example, we'll include TDS 10%. TDS 10%. So tax rate is 10%. Let us take. So interest on debenture. Why we are debiting it? It is our expenses. Right? How much? 1 lakh. Is that correct? And here we are creating a liability. We are creating a liability, TDS payable of 10% out of 1 lakh, whatever the income earned into 10%. Income earned into 10%, it will become 10,000. Is that right? Yes. 2. How much we should pay to the debenture holders? Remaining 90,000 we will pay. Out of this 1 lakh, we have deducted rupees, we have deducted 10%, that is rupees 10,000, and we are remitting it to the government, and to the debenture holder we are paying remaining amount 90,000. At the time of payment, it is due, right? At the time of payment, we will pay, right? Reverse the entry. TDS payable, debit 10k, and debenture holder, to debenture holder how much we will pay? 90k. To bank, through where we will pay? Through bank, 1 lakh. Is that clear? Is that clear? Let us do one more example. What they have given: 10% debenture of rupees 20 lakh, issued 10% debenture of rupees 20 lakh. Okay, interest is payable on 30th September. One second. Interest is payable normally. Normally, in the company, they will pay the interest on debenture on half yearly or yearly once. Half yearly or yearly once. By that, interest is payable on 30th September and 31st December. 31st December. So financial year is the next. TDS rate is there. TDS rate is 10%. TDS rate is 10%. Books of accounts are closed on 31st 3. Books of accounts are closed on 31st 3. So what will be the entry? What will be the entry? Let us first interpret the question here. Let us consider it. Let's consider it as financial year 1/4 and year end is 31st 3. When we are receiving the interest 30th 9, that is September, we are receiving the interest, and we are receiving here all in the year end, right? No, the question specifies that this. Okay, that is next example. In this example, we are paying the interest on 31st 3 itself in the year end. Now, shall we do the entry? Shall we do the entry on when we are paying here? We should make it due unpaid, right? On this date, 30th September. What will be the entry? We should make it due interest on debenture. Interest on debenture. How much? 20 lakh into 10%. Let me calculate that because it will be confusing. 20 lakh into 10% is the interest rate, right? We are paying half yearly. We are paying half yearly, so that 6 divided by 12. What it becomes? 1 lakh. It becomes 1 lakh. Is that right? Okay, fine. Next, to TDS payable. To TDS payable, amount is 10%. Out of 1 lakh, 10% is 10,000. Is that visible? I think yes, or else shall I write it here? 10,000. To whom we will pay? To debenture holders, 90,000. Is that clear? Is that clear? Next, it is due entry. Is that right? We will pay. Paying entry is reverse this. TDS payable, debit, debenture holders, debit, from where we will pay? Bank account. To bank account. How much? TDS is 10,000. Remaining will pay 90,000 and 1 lakh total. Is that right? We have paid that. And in the 31st 3, in the year end, again two entries are same. Again two entries are same. Can you do that, or shall I do that? Let me do that. Interest on debenture, how much? 1 lakh again. 1 lakh. Is that right? And to TDS 10k and to debenture holder 90k. Is that right? We are making it due and we will pay it. TDS payable. debit, debenture holder, debit to where will pay, from where will pay, bank account. How much? TDS is 10k, remaining 90,000 will pay, and total 1 lakh rupees. And because interest is our expenses, interest is our expenses, we will transfer it to P&L account. We will transfer it to P&L account. So what will be the entry? Statement of profit and loss account, debit to interest on debenture, debenture interest on debenture. How much? Total interest 2 lakh rupees, right? 2 lakh, 2 lakh. Yes, this example is got completed. You can take it down. The next concept is interest accrued. Interest accrued but not due. Interest accrued but not due. Sir, we have heard about interest accrued but not received. But what it is? Interest accrued but not due. You know the meaning of accrued? Do you know the meaning of accrued? That is income generated but not received yet. Income generated but not received yet, because we are talking about interest. It is our expenses. Interest accrued, which means accrued, we didn't pay it, but it is not due. Means what it means, let me explain. Okay, let us say financial year 1/4/2020, and here 31st 3 2021. Is that right? Is it our financial year? Let us just example, we'll take it as financial year. Here, yeah, on 30th June we will pay interest. Okay, fine. And also because we are paying half yearly, so on 31st December also we should pay the interest. Is that correct? Yes, it is obviously correct. Right, right, right. Okay. Here we have 6 months. Here we have 3 months. And here also we have 3 months. And these interest accrued will be received or paid on 30th June. Is that correct? Yes, yes, it is obviously correct. So what do you mean by interest accrued but not due? Right. Here we have paid interest year, and also we have paid interest year. But these 3 months, whatever remaining these 3 months in the year end, did we pay the interest? No. The due date is 30th June. On that date, we will pay that amount. Okay, fine. But we are closing the year. We are closing the books of accounts. Closing the books of accounts. Right, we are closing the books of accounts. We should record this 3 months interest, right? Because it is our current year, related to current year. Yes, obviously we should record this, but it is not get due yet. If you didn't understand, let me take an example of salary. Salary, okay, fine. Every month first you will receive your salary of rupees 30,000. 30k you will receive the salary. Okay, fine. But you should work second, third, fourth, fifth, right? Every day you should work so that it can become 30,000. But Practically, you are receiving, if you work for one day, you will get 1000, you will get 1000, you will get 1000, you will get 1000. Is that right? Yes, obviously we will receive. So if it is here it is accruing, here we, it is accruing, is they are paying to you, is they are paying to you. Sir, why they will pay? The due date is first. Is that right? Is that right? Yes, the due date is first. If we are accruing here every day 1000, it is called accrued but not yet due. The due date is first of every month. So then we will receive. But we are accruing the salary. Here we are getting accrued salary but not receiving. We will receive on first of every month. This is your interest accrued but not due. Right, shall we go for the example? You'll better understand there, if not here. Okay, fine. XYZ Limited. XYZ Limited. XYZ Limited. Issued 10% debentures of rupees 10 lakh. 10% debenture of rupees 10 lakh. Yes. Interest payable. Interest dates are 30th June and 31st December. Is that visible? Shall I write it? Increase the font size. 30th June and 31st December of every year. Books closed on 31st 3. Books closed on 31st 3. Books closed on 31st 3. Record journal entries for financial year 17-18. Financial year 2017-18. Let us make it 2021. Shall we make it as 2021? Yes, what they have given, let us interpret the question. Everything you know, but here this is the problem. Right. Shall I explain that once again? 1/4/2020 and 31st 3/21. It is our financial year. Fine. Here on this date, 30th June, we will pay the interest. And also after 6 months, on 31st December, we'll pay another interest, another half year's interest. Fine, sir. I understood this. And one more. These 3 months interest we will pay in the next year, 30th June. For this period, we should record it, right? If it is accrued but not yet due, we shouldn't pay that, but it is already accrued. We should record it in the books of accounts, right? Because we should close the books of accounts. And if you understand this, here also in the previous year for these 3 months, whatever 31st 3 not sorry 31st 12, right? 31st December to 31st 3, 31st December to 31st March, we may have done the entry. I'll teach the entry. We may have done the entry, right? We should make the entry here also. So what is the entry? First, let me explain the entry. So interest on debenture, is that our expense? Obviously it is expense. Debit. Two, interest accrued but not due. Why we are crediting? It is our liability, right? It is our liability. It is creating a liability for the next year. It will be your entry, right? Let us solve the question. Let us solve the question. Okay. First, we have made an entry. This is not related to the solution, this entry, but for the understanding, for the better understanding, we made an entry in the previous year. Interest on debenture debit. How much interest is 10 lakh into 10%, 50,000 is the interest. 50,000 is the interest, right? Out of that, we have made an entry for these 3 months. Let us write the calculation. 1 lakh, whatever the amount is, sorry, 10 lakh into 10%, it will be 1 lakh. Out of that 1 lakh, we should record it for 3 months, because we are we should record that. We should record that because it is accrued but not due it, right? How much? It will be 25,000. Is that right? To interest accrued but not due, 25,000. It is not your related to your solution. For the better understanding purpose, I have written it here. Now actual solution starts. Interest on debenture. Interest on debenture for the current year. 1/4/22, 31st June. How many months are there? There are 3 months. For these 3 months, we should receive, or sorry, we should pay the interest, right? We should pay the interest. How much it becomes? We are paying 6 months once. Mind it. Okay, it is 25,000. We have calculated there 25,000. The same previous 3 months comes to the next 3 month, 25,000, right? We are paying to the 6 months once. So interest on debenture for the current year, it is 25,000, and accrued interest is 25,000. Interest accrued but not due. We are making it due now. But in the previous year, just we recorded. Okay, fine. 2. Interest accrued but not due. To whom will we pay? Oh, it is 25,000. It is debenture holder. To whom will we pay? To debenture holders. And at the time of payment, straight away we will pay debenture holder account debit 50k to bank account. How much? 50k, 50,000. Next, on the date, on which date we are making? 30th June, right? On this date, 31st 12, what will be the entry? 31st 12, straight away we are paying this. No drama of this thing, we are straight away paying that. We should make it due. Interest on debenture account debit to debenture holder. How much? 50k, because for 6 months, right? Debenture holder account debit to bank account 50,000, 50,000. Take down this, take down this, and we will make entry for the year end. We'll make entry for year end, and we should transfer the interest to the P&L account, right? It is our expenses, so that we should transfer the interest amount. Take this in the year end. What will be the entry? Interest on debenture, debit to interest accrued but not due. Not due. Is that visible now? I think I was writing simply. Okay, 3 months interest 25,000, right? 25,000 and 25,000. The entire interest will be transferred to P&L account. SOPL, statement of P&L account, debit to interest on debenture. Interest on debenture. How much? Total interest for the year 1 lakh. Is that right? The question got completed. You can take it down. Let me see the next question. Issue of debenture as a collateral security. Issue of debenture as collateral security. Let us understand this. Let us see. You have taken a loan. You have taken a loan through mortgaging your building. Mortgage building. Through mortgaging your building. Right. Let us say building is, let us say you need 50 lakh loan. 50 lakh loan. Building is worth for 70 lakh. Building is worth for 70 lakh. But bank people says that if in case in future if the building value reduced, so how will we recover your loan? Whatever the given loan, how will we recover? So the bank asks for the collateral security. Collateral security. It will be the primary security. Primary security. And the bank will ask another security for their safety purpose. In case if building reduces and they can sell the debentures and they recover the money. Debentures can be issued as collateral security. Security. Yes, is that right? Did you understand that? Shall we move on to next? Shall we do the question? Shall we do the question? Yes, XYZ Limited. Here is it. Yes. One more thing is there. One more thing is there. If you issued debenture for collateral security as collateral security, so we just make an entry, whatever we loan received entry, just we will entry that only. Bank account debit to bank loan account. Only whatever we have received as loan, we will make entry for that itself. We won't make any entry. The one method is, there are two methods. One method is we won't make any entry for the security, no entry. It is the correct treatment as per your books of accounts. But there is second method. Second method. There is a second method. For our satisfaction, we will do a entry, a dummy entry. Debenture suspense account debit to debenture account. And when we pay entire loan to the bank or whomever we have taken from, we will make another entry. We will just reverse the entry when we pay the loan. Debenture account debit to debenture suspense account. Suspense account. Suspense means it is nothing. No, for no reason we are making an entry. That's it. Why we are making, we also don't know. That is the suspense entry. Yes. Okay. Shall we move on to the question? Shall I erase it or you should note it down? Take down. I will erase it. The question. That's why I'm wondering why it is. So let's see. For example, let us do the example sum. For better understanding, XYZ Limited took a bank loan. Let us say Govind Swami Company. Govind and Company took a bank loan. Took a bank loan. Right. Of rupees 50 lakh. Of rupees 50 lakh and mortgaged building of rupees 45 lakh. Let's take 40 lakh. And mortgaged building of rupees 40 lakh and debentures as collateral security of rupees 25 lakh. Debentures as collateral security of rupees 25 lakh. Okay, it is 10% debenture. It is 10% debenture. Okay, let us do the method one first. Method one first, there will be no entry. Method one, just we'll make an entry for receiving the bank loan, where we'll receive bank, in the bank we'll receive bank account debit to, it's a liability, bank loan. Liability is the bank loan. How much? 50 lakh. That's it. That's it. Nothing entry. No entry for the mortgaged loan, mortgaged building. Right. In the, let us see in the balance sheet how it looks. In the balance sheet how it looks. This is your balance sheet. You write the drama in a, okay. First we will have shareholders fund, and next non current liability. Under non current liability we show it as long term borrowing. Long term borrowings, because it is loan, the debentures we won't actually pay bank loans in a year. It won't be in the current year, right? That's why we take it as long term borrowings. How much? 50 lakh. And in the third, current liability will be there, nothing much. Okay, there. Okay, 50 lakh. Okay. And in the assets we have current, sorry, non-current assets. First we will have non-current asset, then we will have current asset. Under current asset, how much we have received in the bank, cash and cash equivalent. And the bank, no, at the head of cash and cash equivalent, show it as bank balance 50 lakh. This will be the treatment in the balance sheet, and we should make a note for notes to accounts. Notes to accounts. Notes to accounts. Okay. Bank loan of rupees 50 lakh, and we will describe it here. Building mortgaged of rupees 40 lakh, and and we will show it as mortgaged building, and a security premium issued debenture, issued issued debentures of rupees 25 lakh against bank loan, against bank loan. Is that visible? Yes, it should be visible. Okay, like this we will describe in the notes to accounts. This is done. You can take it down. We'll move on to next example. Okay, method 2. Bank account debit 50 lakh we will receive to bank loan 50 lakh. And in the method 2 we'll make entry, we will make entry for the mortgage also. Debenture suspense account, debenture suspense account 50 lakh to debenture account. Debenture suspense account debit to debenture 50 lakh. So how will we show in the balance sheet? How will we show in the balance sheet? First we have shareholders fund, right? Holders fund. Okay, fine. Second, in the second we have what we have, non-current liability. Okay, under non-current liability we show it as long-term borrowing, 50 lakh, right? Because we have made entry for this mortgage, we should show it here also under other current liability, other current, so other non-current, other non-current liability 25 lakh, right? And next will be the current liability. Next, assets. In the assets, non current asset. In the non current asset we show it as other non current asset, 25 lakh. And in the current asset we show it as bank. In the cash and cash equivalent bank account 50 lakh. We shouldn't balance this by mistake also. Don't balance this balance sheet, right? Is that done? Yes. We should make notes to accounts. We should make notes to accounts. I'll make in a one note. You should make different notes. That's it. No problem. Bank loan How much? 50 lakh. And debenture, you should create another note. Debenture 25 lakh, right? 25 lakh. And other non-current asset 25 lakh. And other non-current liability, other non-current liability, right? Other non-current liability 50 lakh. You should make separate notes. Just I made it in one note, it's not a problem, but you can make it in the other notes also. Yes, the question is done. The question is done. Next concept is, we should note it down, right? We should note it down. The next concept. So the next concept is write off. Write off. Write off. Loss on issue of debenture. Loss is nothing but discount. If we give discount, we get loss, right? Right. Write off loss on debenture. What do you mean by write off? Write off means we are accepting it. Yes, we got loss. That is, and we will record it in the books of accounts. It is called write off. We are accepting the loss. Yes, we have loss and it cannot be returned back. Yes, right. So what will be the entry? What will be the treatment? What will be the treatment? The treatment will be on two different methods. One is fixed installment method. Another is proportionate method. One is fixed installment method, another is proportionate method. Fixed installment method means, let us say you have loss of 10,000 and the debenture will be repaid after 4 years, right? Loss will be for four equal installments. We'll divide 2,500 per year. Every year we will pay, we will write off, 2,500 in the books of accounts, in the P&L account. Proportionate method means we will write off as per ratio, as per ratio, as per ratio, that we will see in the question. You will better understand there itself. So let us do a question for both. Let me take example. XYZ Limited issued XYZ Limited issued XYZ Limited issued 50,000 10% debenture at 5% discount. What? Issued 10% debentures, it is coupon rate, and at 5% discount. Okay, fine. Redeemable after 4 years. Redeemable after 4 years. After 4 years. How to write off the loss on issue of debenture? How to write off? How to write off? Okay. If nothing mentioned in the question about face value, we will assume always face value of rupees 100, right? If 5% discount means 5 rupees discount, right? 95 we may have issued, is that right? And I didn't write the amount, right? Yeah, 50,000 debentures issued. 50,000 debentures, let me write here only. Okay, okay, fine. 50,000 debentures into loss of 5 rupees. How much total loss? 2 lakh 50,000. 2 lakh 50,000 is the total loss for us. And how many years we have for redemption? We have 4 years. It is per year 2 lakh 50,000 divided by 4, 4 years. Per year fixedly every year we should write off 62,500 in the books of accounts. Is that right? Yes. How will we make entry? Statement of P&L, debit 62,500 to discount on issue of debenture 62,500 for the first year, and in the second year the same entry, third year the same entry and same amount, and the fourth year also we have same amount, same entry. That's it, that's it. And we should make discount on issue of debenture account T-shaped. Okay, how many percentage? 10% debenture, right? 10% debenture, 10% debenture, how much? 2 lakh 50,000 total. And we'll transfer to SOPL, statement of P&L account, 62,500. How much will be the balance? How much will be the balance? 2 lakh 50,000 minus 62,500, remaining 1 lakh 87,500 by balance carried down. And this is for first year. In the second year, again T-shaped column, again T-shaped column, and to balance brought down, we will brought down this balance 1 lakh 87,500, and in the next year we'll write off SOPL 62,500 again because it is fixed, right? By balance carried down 62,500, 1 lakh 25,000. Again in the third year we'll brought down this balance and write off this, and remaining balance goes to the next fourth year. The same continues to the next two accounts. Take down that and remaining balance account, you do that. Fixed installment method, we have done with the fixed installment method. You should do the proportionate method. Method 2, proportionate method. Proportionate method. Let us take down the question. ABC Limited. ABC Limited issued debentures at discount of 8%. Issued discount of 8% on 1/4/2016. Debentures redeemable as following. Debentures redeemable as following. How much? On 30th 31st 3 2018 12,000 they can redeem, and 31st 3 2019 8,000, 31st 3 2020 total how much it become 30,000, right? Okay, is there any other information? Nothing. Okay, shall we calculate the ratio? Shall we calculate the ratio? Total they can redeem 30,000 debentures, right? At we will assume face value is 100, 8% of face value means 8 rupees. Total 30,000 debentures, 30,000 into 8. How much discount comes out? 30,000 into 8, 2 lakh 40,000. 2 lakh 40,000. Right, right, right. Year utilized ratio 2000. Okay, 2016 17, 4 years, right? Redeemable for after 4 years, or they have given redeemable, right? Okay. 2017 18, 18 19, 19 20, the last redemption. Okay, utilized first 30,000 into 8, 30k into not 8, 30k into face value. Face value is 100. In the first year we didn't redeemed anything. We didn't redeemed anything. Whole 30,000 was there. So face value is 100. It becomes 30 lakh. Right? 30 lakh. Okay. In the second year also. In the end of the second year, we are redeemed, but it goes to the next year. In the second year also, we have whole amount 30 lakh. And in the year 2018, we have redeemed. In the 2018 means opening 1 4 you can take 12,000 we have redeemed. Out of remaining 18,000 will be there into 100, 18 lakh, right? 18 lakh. And in the next year 8,000 we have redeemed. 8,000 we have redeemed means remaining 10k will be there. In the next last year we will redeem fully 10 lakh total. Okay, now we should calculate the ratio. We should emit the all zeros. 30, 18, 10. Right, if we simplify more, it comes 5, it comes 9, right? 2 9s are 18, okay, 15, 15. If we simplify 15, 15 is to 9 is to 5. It comes out like this. And shall we proportionate this with the ratio? Yes, 2 lakh 40,000 in the first, 2 lakh 40,000 into the first year's 15 divided by 44. 44 from where it comes? 15 plus 30, 39, 44 is equals to comes out 2 lakh 40,000 into 15 divided by 44. 81818, right? 81818. Yes, in the second year 2 lakh 40,000 into 15 divided by 44. We can write off from here 2 lakh 40,000 here, 2 15 divided by 44. We can write off again 81818. And third here, 2,40,000 into 9 divided by 44 is equals 2,40,000 into 9 divided by 44, 49090. 91 you can take because it is in points. Fourth year, in the fourth year, 2,40,000 into how much? 5 divided by 44. The ratio, how much it comes? 2,40,000 into 5 divided by 44. 27272. 27272. So we can write off in the first year 81818, in the second year seeing, and the in the third year 49091, and in the last year 2727. We can, what we can write off these amounts. Yes, take it down, take it down. Should do accounts for these. Fatafat. Yes. Shall I erase it? Yes. Shall we do the journal entry first? SOPL account debit. How much in the first year? 81818. Right. To discount on issue of debenture. The same 81818. Is that correct? And it is for first year. Second year also same entry. Third year also same entry, but amount changes. 8 and in the 49041, I think so. In the second third year, in the fourth year 27027, I think so. Don't know. So whatever amount in the four year also same entry. And we done ledger it, T-shaped column, whatever you write in the heading, T-shaped column, debenture, whatever percentage, 10% debenture. How much it was? 2,40,000. And in the first year we are writing off rupees 81818. Right. Remaining by balance carried down. What will be the remaining amount? 2,40,000 minus 81818. 1,58,182. And it will be next brought down in the second year. Brought down in the second year, and we will minus again the, not minus, we will write off again 81818, and remaining balance goes to the next third year. And next, in the next third year, SOPL trans sorry write off some amount 49091, and the remaining balance goes to the fourth year. And next the remaining amount will be written off, and that is your end. Yes, the concepts got completed.